Grab Holdings. Thank you for joining us today. Let me go make sure that Facebook is with us because sometimes they're not. I might have to work on this. Yeah. Okay, they are with us. Perfect. Okay. All right. So today we are going to talk about how to pay yourself a reasonable salary and when it's a good time to give yourself a raise. Now, today we're specifically talking about S Corp. So if you're not an S Corp, this won't exactly apply to you. You don't have to pay yourself a salary specifically when you are a sole proprietor. Okay, you just take owner's draw. So if you're stopping by for the replay or you're watching live, comment below and tell me where you're from and what kind of business you have. Okay, so today, again, we're talking about how to pay yourself the right way so you don't send the wrong message to the IRS. So the first step is to talk about distributions and your salary. In an S Corp, you have to do both. So distribution specifically, that's the profits from your business or the losses from your business that pass through the S Corp to you and any of the other shareholders. Distributions are not employee wages, and they're not treated as self-employment income. It's not the same thing. It's distribution income. Now, the great thing about this is that you don't pay payroll taxes on distribution income in your S Corp, which can be a very good thing. Then salary, on the other hand, has to go through a payroll system. Now, that system doesn't necessarily have to be a payroll processor like Gusto or Paycom or something like that. It can be, handwritten checks. But you have to make sure that you're paying all the necessary taxes on that. So that's why people usually use payroll processors. Anyway, you have to pay yourself like any other employee when you're paying yourself a salary. So that means you're paying those payroll taxes, Social Security, Medicare, federal taxes, all of it. So any income you're taking as a distribution is not paying payroll taxes, so it saves you that money. But before you get excited, the IRS is pretty specific on the fact that you have to have a reasonable salary as an owner of an S Corp. Every employee. So that means you have to know what a salary is. So the IRS defines that reasonable salary as at least what other businesses pay for a similar service. So whatever your role is, whatever you actually do in your business, you need to research what it is other businesses pay for that. So if another business was going to hire you and you do marketing inside your business, how much is another business paying for that when they hire someone to do it for them as an employee? Or if you're an artisan, you're creating beautiful woodwork, how much would another business pay you to create that handcrafted object for their business? Now, we're not talking about the cost of materials. We're not talking about the cost of marketing that's going into it. It's not the same as the overall revenue price that you're setting. It's your specific wage rate if you were being paid by another business to do that. And they're taking care of all those overhead costs, like materials and marketing and all that stuff. Ad dollars, that kind of thing. Okay. So once you figure out how much that is, you need to determine how much you take in salary and how much you take in distributions. So what you're making in distributions is not the same as the reasonable pay that we're talking about. It's any additional money that you're paying yourself. So that reasonable salary follows those rules that the IRS sets. The distributions can be whatever you want them to be, whatever you need them to be, depending on how well your business is doing. Then I know that sounds like an open season for payday. Like well, I can just pay myself $100,000. Yay. But, every month. But you have to make sure it follows the IRS rules. For example, like I said, reasonable pay is what a similar business would pay for that service. So think about where you might go. So Glassdoor, for example, or wage rate. Sometimes Indeed has common wages or salaries for certain positions. Look those up. And then you want to think about what somebody who was hiring you to do that would think about. What's your training and experience? What are your responsibilities in your position? Time devoted to the business. Are you working part-time or are you working full-time? What comparable businesses pay for that same service is just one part. And then there's also like different compensation agreements. Like, would another business pay you commission on top of salary? And then you just remember that reasonable salary requirement for S Corps only comes into play if you and the other shareholders are taking distributions from the company's profits. So the IRS can't impose a minimum salary requirement. So if your business is not doing super well and you can't pay yourself the same salary you're seeing that other businesses are paying for the services you're providing your business, that's okay. All right. Other places that you can look might be like the Bureau of Labor Statistics, or sometimes just simply a Google search can show you how much people are paying for something. And if this conversation is stressing you out or scares you even a little, then you probably need to get help from a professional. You don't want to wait until tax time to find out that you could have saved yourself some time and some money by doing things a little bit differently. Okay, so the third step, the final step here, is to talk about how to make those salary payments to yourself. So once your business is organized as a legal entity and you are an S Corp, then paying yourself gets a little bit more complicated than just collecting money from clients and customers and passing it on to yourself. You have to operate the business like any other business with employees, even if you're the only one on payroll. So this is where I suggest adding a payroll processor, like Gusto. So you need to check the requirements for your state on what your business has to pay as an S Corp, since each state has different rules and contributions. And that'll change every time you add a state to payroll, but that's another question. Anyway, as an S Corp, it's up to you to determine how often to pay yourself. Now, some business owners, they just pay themselves once a year. And that's fine. You can do that. But it might be easier to pay yourself at least quarterly. That way you're able to pay your payroll and income tax payments also quarterly based on those numbers. And then you can also file quarterly with that employment tax return. And then if you're needing more money than that, you can take shareholder distributions at any time. Lots of people pay themselves on the same schedule, like once a week, every 2 weeks, or once a month, just like they pay the rest of their employees, and that would be fine as well. So here's a little insider tip. You don't have to pay yourself the same salary every payday. In the first place, you can give yourself a raise. And secondly, you could give yourself a small salary every quarter and then give yourself a big bonus at the end of the year as an end of the year bonus. And so that could be a different tax rate. Generally speaking, there's a 22% tax rate on bonus payments. So what's the big takeaway? When you are running a business of one, but you're an S Corp, that can be a really smart way to save a good amount of money on your taxes. It's definitely better than a C Corp in that you're not being taxed twice. But the goal to meet your tax requirements while paying yourself the amount you deserve. You wouldn't pay an employee an unfair wage. That's not who you are. Why would you accept the same behavior for yourself? So if you need support on this, comment below with next steps so I can reach out and talk about how we might be able to support you. At the end of the day, complying with the S Corp tax requirements and all the other legal requirements that come with running a business can be time-consuming and frustrating. Many businesses hire a payroll tax service or bookkeeper like me who can handle the hard work for them. We at Pendergraft Holdings, we do both payroll and bookkeeping. And so if you don't have a team to support you in this, please feel free to reach out and we can talk about how we might be able to help. Also, if you have a business friend who might need to hear this information, share this video with them or tag them below. Thanks, everybody. See you next week.